Hello everyone. So today we will discuss about the financial institutions from financial market and institution subjects. So let's start with the introduction. First, we will understand what is the financial system, how it is important to us. So the economic development of any country depends upon the existence of a well-organized financial system. So if the country they are well organized their financial system, then only the economic or the country economic will get developed. Right? So when the system functions properly, it channelizes funds from saves investors. So by increasing productivity, the financial system helps super economic growth and raise the standard of living. The financial system is possibly the most important institutional and functional vehicle of economic transformations. Right? So finance is bridge between the present and the future, and whether it is a mobilization of savings or the efficient, effective, and equitable allocation for investments. So it is a success with which the financial system performs its functions that sets the pace for the achievement of broader national objectives. So the meaning for financial system, the term financial system is a set of interrelated activities or services working together to achieve some predetermined purpose or goal. It includes different markets, the institutions, instruments, services, and mechanism which influence the generation of savings, capital formation, and growth. Let's see with a few definitions. So, in the words of Dr. S. Guruswamy in his book, Financial Services and Systems defined the term financial system as a set of complex and closely interconnected financial institutions, markets, instruments, service, practices, and transactions. So the characteristics or role or features of financial system, it plays a vital role in the economic development of a country, as we discussed the meaning. So it encourages both savings as well as the investments. It helps in lowering the transaction cost and increase returns. So this will motivate people to save more. It links both savers and investors. It helps in mobilizing and allocating the savings efficiently and effectively. It helps in bringing investments. It facilitates expansion of financial market. It helps in allocation of funds. It is a set of interrelated activities or services. It creates a bridge between investors and companies. It brings accountability for investors. So many moves are there. Next, we will discuss about the objectives of financial system. So the primary objectives of a financial system are consent to formulate capital, facilitate investment, and profit generation. These objectives are also the significance or importance of financial system in an economy. So the major and primary objectives of a financial system are as follows. So first one, to mobilize the savings. So the financial system begins its operation by the mobilizing of savings from the small saving community. It collects the funds by offering different schemes which attract the investors. So that is savers to fund their savings in different institutions, service, securities, etc. So by offering more number of schemes, they will invite the savings from individuals. And second objective, to distribute the savings for the industrial investment. So the purpose of mobilizing the fund from the saving community from the first objective to invest them in different industries. So thereby it meets the fund requirement of industrial sector. Hence, it helps in the growth of industrial sector. Third objective, to stimulate capital formation. The objective of supporting the industries is not ended with sanctioning a fund to them. Further, it makes them to formulate the capital out of the earnings for the further capital requirement and industrial investment to accelerate the pace of economic growth. The ultimate aim of the financial institution is to support the process of economic growth of a nation, directing the savings fund to the industrial capital need, motivating them for capital formation, support the acceleration of the process of economic growth. Okay, so the functions of financial systems are more provisions of liquidity, mobilization of savings, small savings to big investments, then maturity transformation function, risk transformation function, payment function, pooling of funds, then monitor corporate performance, provide price related information and information function, then transfer function, reformatory function, other functions. So these are all in general term for financial institution. Now we'll discuss about the types of financial system. So the formal financial system, this is also known as organized financial system because it comes under the purview of Ministry of Finance, Reserve Bank of India, Securities Exchange Board of India, and regulatory bodies. So formal financial system consists of four subsystems. These are financial system, financial institutions, financial markets, financial instruments, and financial services. So these four theme systems will be called as a components of Indian financial system. So first we'll discuss about financial institutions. So financial institutions are business organizations serving as a link between savers and investors, and so help the in the credit allocation process. So financial institutions are the institution which offer financial services for its client or members. The most probable service is financial intermediation. The institutions include bank, trust companies, insurance companies, and investment dealers. So the features of financial institutions are it is an institution as well as intermediary. It channelizes savings fund into investment fund. It creates financial assets such as deposit, loan, securities, etc. Then it includes banking and non-banking institution. It includes both organized and unorganized institution, and it accepts deposits. So the classification of financial systems are banking institutions, non-banking institutions. So banking institutions are commercial banks under this public sector, private sector, then RRB and foreign banks, then cooperative bank. Non-banking financial institutions are Provident and Pension Fund, Small Saving Organization, LIC, General Insurance Corporation, then Unit Trust of India, Mutual Fund, and Investments Trust Corporations. Then we will move on to the financial market. So financial markets are another component of financial system. Efficient financial markets are essential for speedy economic development. The vibrant financial market enhances the efficiency of capital formation. It facilitates the flow of savings into investment. Financial markets are the backbone of economy. So this is because they provide monetary support for the growth of the economy. So financial market refers to any marketplace where buyers and sellers participate in trading of assets such as shares, bond, currency, and other financial instruments. So the classification of financial market are unorganized financial market and organized financial markets. So unorganized financial market, these are comprised with private money lender, pawnbrokers, indigenous banker, traders, etc. They lend money to the public from their own funds. The operations and activities of these people are not regulated by the Reserve Bank of India or by any other controlling authority, but still the Reserve Bank of India is trying to fold them to the class of organized financial markets through its strategies. Then organized financial markets, these are the markets strictly controlled and regulated by the Reserve Bank of India and other regulating authorities. They follow high degree of institutionalized and instrumentalized. So they are capital market, the money market, then financial instruments or assets. So financial transaction, this should be a creation or transfer of financial assets. The basic product of any financial system is the financial asset, right? So a financial asset is one which is used for production or consumption or for the creation of assets. So financial instruments are also called as financial assets or securities. Financial assets are the intangible assets which receive value due to contractual transactions. So the characteristics of financial instruments are liquidity, marketing, collateral value, transferability, maturity period, transaction cost, risk, and future trading. The classifications are term financial instruments, short-term securities, medium-term securities, long-term securities, and the types based upon securities, primary instrument or secondary instrument, then innovative instruments. And last one is financial service. Financial service refers to services which are financial in nature offered by financial industries to its customer. Its objective is to intermediate and facilitate financial transactions of individuals and institutional investors. In other words, financial services are the products or service offered by institutions like banks and credit card companies, insurance companies, stock brokerage companies, etc. So we will see one non-banking financial services. As an example, we will go through the NABARD. So NABARD stands for National Bank for Agriculture and Rural Development. So here you can go through with the websites. So about the what is the functions they are doing, how what are the financial methods they are having, direct finance or refinance, and then you can here you can check the developments done by the NABARD, institutional development of farm sector, off farm sector, then financial inclusion, microcredit innovation, research, and then climate change. Then what are the supervisory body, how it is processing, then credit monitoring arrangements, how they are doing for sanctioning the loans, how they are managing the credit process, then board of supervisions, other initiatives, and then here you can go for the latest updates and what are the schemes that NABARD sponsor. Direct. Okay. So to get more information about the NABARD, you can go through the websites. Likewise, each and every financial institution having their own websites for IDBI, LIC, NABARD, Exim Bank, everything you can go through the websites to you can get more information about the banking sectors. Right? Okay, thanking you. We'll see you with next topic. And here I'm sign off. This is Professor Dhanapal from Department of Commerce, Christianity College. Thank you.